So today we're having a look at McDonald's Corporation, ticker symbol MCD, and see if it's still a buy in 2021. Let's have a look at the stock price since the start of the year. You can see it was around about $210 a share. The lowest was around about $202 and has gone up to its all-time high of $250, but just trading slightly below that at $240 a share. Let's just have a look a little bit further, go to the 5 years and see how it handled the pandemic or the market crash in February and March. You can see it got down to $120 a share before doubling since that point. That is massive. There's a massive rebound. A lot of the stocks have rebounded to their previous highs. That was 220, but this has actually pushed above that, which is great to see. If we look at the all-time chart as well, and sort of what I would do is like looking at the log level, and you can see it's just been progressing at a pretty steady rate the entire time. Took a hit in the 2003 actually, and then the next biggest one was during the coronavirus pandemic. But you can see it's been a pretty steady stock since the late 60s, which is crazy. So let's have a look and see if it's still a buy. We'll look at the fundamentals first, then some TA. So as I said, McDonald's, it's in the consumer cyclical sector, market cap of just over 180 billion, share price of 240. It pays a healthy 2.28% dividend, and the ex-dividend date is the 30th of November. So buy before then if you're interested in that dividend. But let's have a look at that, these steps, and can you give it a like on the video? It really helps me out. Gets this video out to as many people as possible, and in return I'll keep bringing as many videos as I can. So let's have a look. Is the P ratio less than the market? Yes, it is 26 to 28, so that is a pass. Is the revenue increasing? And you can see the revenue is up slightly, 21 billion to 21.7 billion. And if we just have a look at the revenue over the last few years, you can see it has been increasing over the last 4 years. During the pandemic, wasn't down that much to 19 billion, but has rebounded pretty well. Let's have a look at the next step, which is we want to see, is the profit increasing? Yes, 6 billion to almost 6.9, so that is a pass. Are they buying back their shares? Yes, they are. 790 million to 750 million, so that is a pass again. And finally, is the free cash flow increasing? Yes, it is. 4 billion to 7 billion. So that is 5 out of 5, and it has a free cash flow ratio of around about 25, which is pretty good. A little bit on the high side, but for a company that's still growing like this, well, actually, they are growing in terms of free cash flow, but that revenue is a little bit down. If we just have a look at the Yahoo Finance again, you can see revenue was 22 billion in 2017, and it's almost getting there. But the profit, if we look down here, you can see the profit has been increasing steadily. So they're managing to get a lot more profit out of their revenue, which obviously it's harder for this company to grow, but they're finding ways to do it. And if we go to the cash flow as well, and just have a look at that, free cash flow has increased dramatically, almost doubled since 2017, which is great to see. So what is the valuation of this stock that I'm giving? Well, let's have a look at my sheet, and we're looking at discounted free cash flow. I've calculated the future free cash flows, currently at 7 billion in 2020, and I've calculated outwards. And yes, a little bit reserved in some instances. We're expecting to go back a little bit. But if you have a look here, discounted free cash flow would give a calculated stock price of around about $36.32, which means it's a little bit overpriced at the minute. But what we want to do is say that you think 2020 is going to continue in 2021. We're going to increase that. So what we do is we look at these. We're looking at the 70% here. We're looking at these last numbers. Say it's going to be around about, I don't know, 100% rather than that. And you'd see that once again it's increasing. It would be trading at a discount. So if you think 2017 is a bit of an outlier, but if you're saying that McDonald's will have more free cash flow than 2021, let's just increase these numbers a little bit more. We'll do it 110%. And then that would say it's trading at a 13% discount, $273. If you think 2021 is going to beat 2020 in terms of free cash flow. Oh, sorry, I need to realize I've just seen these are 2020. I need to update these. Sorry, 2021 and 2022 updates is higher than this. But very interesting from the free cash flow. About fairly valued if you're a bit conservative, but if you've got the bullish case on McDonald's, it is saying it's slightly undervalued. And let's have a look at the Buffett-Graham intrinsic value. This uses expected growth, earnings per share, and they really love this stock. gives it a fair value of almost $450, 82% discount, and a graham price, which is buy and hold forever at this price. If you can get it at this price, you are laughing. And that is $334.29. So discount-free cash flow says it's either fairly valued, or if you're a little bit more bullish, it is a buy. And the Buffett Graham intrinsic value really loves this stock, even at its current price. So that is very good to see. So finally, what we want to do is we're just going to look at some of the technicals. And I like to look at these to see where you want to trade in the short term. If you're not really interested in the fundamentals of the stock and you want to look at the momentum and what the stock's doing, then this is the part for you. So let's just add on these moving averages. We've got the 50-day in green, the 100-day in yellow, and the 200-day in red. You can see that it has been nicely above the 200-day since, let me just take off the log, since July. Well, it's only broke below that during the pandemic. It was doing pretty well, and then pre-pandemic it had some trouble and done that, but that 200-day has acted support for a long time. What we're looking for sort of bullish signals, you can see the 100-day since about May has really acted as a support line as well. Whenever it's broke below that, it's gone straight back up. And then once again, the 100-day hasn't broke below the 100-day since March of 21, which was when the stock had a big run up. So that's in terms of the moving averages. Next thing I like to look at is the MACD and then see what the stock has been doing in more recent times. So we've got the MACD here, and you can see that stock is currently in a bit of a negative motion. MACD lines have crossed at this point here, and now where looks like the stock is recovering. So probably in the next couple of days you'll expect the positive side, and then you would buy at that point and then hold. And if we look at previous points, you can see here this would have been a buy signal. You would have rated up to about there, and if you got out just as the momentum was decreasing, you would have made some good money. Once again, massive buy signal here. You would have got some good profit there from 230 to almost 250, and then this massive one here, that would have been a good time to buy. 208. You would have bought, you would have bought, you would have held, and you would have sold there. So MACD for McDonald's, funnily enough, is being a pretty good indicator over the last year. And then finally, what we would like to do is look at the RSI, and this is the relative strength. Sorry, not the strategy. We want to click on this one, and let me close this down and get rid of you. So this says whether the stock is in the overbought or oversold regions. You can see here the stock was in the undersold regions, which would have been a good time to buy, and then you would have sold probably above here when it went above the line. Currently, it's trading sort of fairly, maybe a bit on the oversold region, but nothing too much. I mean, the stock hasn't really ever been underbought too much until November, and here, I mean, even if we go out, the last time it crossed below this was in the pandemic, then just before it, funnily enough, as well. So I would say MACD and the moving average is a bit more solid on this one, but the RSI does kind of show that the stock is in a steady position. Right, guys, thanks for watching. Please give a like on the video if you've enjoyed it, and I'll catch you guys next time.